Wichita District Office. I'm also a program manager for Emerging Leaders. Been doing that since 2014. It's the highlight of my year. I'm really sad we can't do it this year. And I'm actually, I'm sad it's not happening, but then again, it wouldn't be appropriate in this time because I don't think any business owner right now could clearly set up there at the 30,000 foot level and figure out how to plan for the next 3 to 5 years in this uncertainty. So I certainly hope things stabilize so we can get our bearings and continue the program next year. Today I was going to focus on our disaster loan programs, give you an update on how that goes, and then also touch base on our conventional sources of capital. And I have a quick question regarding yesterday, the Economist talking. Did he predict there may be a credit squeeze coming up, or because that's something I was going to mention at the end?
I think we touched on it briefly, but please
Okay.
Go a little deeper.
Okay. Well, today I was going to give you a quick update that last week the president signed new appropriations to fund the Paycheck Protection Program, and there was also $60 billion for the Economic Injury Disaster Loan, or we refer to it as EIDL. However, as of today, the SBA is not accepting new applications. We hope that they're going to reopen it. The fact that they haven't said definitively that they are not going to accept any more, period, is a good sign. But the uncertainty I'm getting, most of my calls are about, A, where's the EIDL? I applied for back in the end of March. And then the second question is, when can I apply? Because I forgot to do that the first time. But nonetheless, we do know that the SBA is processing the Economic Injury Disaster Loan applications, and they are sending the advance part, which is really a new concept. The advance or grant part of the EIDL has never been offered before, and they are doing a brief vetting of all the applicants, and the ones that pass that first go round, they send them the EIDL advance, which is basically up to $10,000, and it's calculated at $1,000 per employee. So people are just waking up in the morning and finding $6,000 or $8,000 or $1,000 in their bank, and it's from the SBA, U.S. Treasury, and they never received an email. And so I apologize. It doesn't seem logical that would happen, but these advances are being distributed as fast as possible, not fast enough for many people. And they are one by one going through the applications that have already been submitted. And basically, as you may know, these are programs been around for decades. It's supposed to provide a business enough capital to cover their ongoing expenses for a 6-month period. And that's the purpose of it. Congress at the end of, or in March, tried to figure out a way, well, how can we keep our employees, on the payroll? And they came up with a Paycheck Protection Program, and they made it a fairly simplified application, but because they simplified it and they narrowed it, it doesn't actually apply, or it may not really benefit some employers, especially those that have been forced to be shut down. And even though they have employees, they can pay employees, the employees that can't work. And so it's really a predicament for them, but it is meant for all small businesses and even nonprofits, and even some farm or agricultural entities can apply for it. And basically, there are ways to calculate how much a business gets. There's essentially two ways. One way is for a business that actually has W-2 employees, and the other is for sole proprietor, single operator LLCs that only have 1099s or actually just work on their own. So there are two ways to calculate it. One is based on the average payroll for the business in the last year. If it's a seasonal business, they can take a specific range from last year to gauge what the average payroll would be during the season right now. This program is the last day a loan could be approved or dispersed is June 30th. So it's something that unfortunately businesses can't apply for and use later on. It is something, and maybe that's an unintended consequence. They didn't realize how long the shutdowns would be. But to get on with it, sole proprietors can also apply, but the amount is based on their 2019 Schedule C, their net profit, which is on line 31. If they haven't already done that, done their Schedule C, they need to do it and provide it to the lender. And the forgiveness calculation basically really hinges on the date the business receives the PPP. So it is for the 8-week period beginning on the day you receive the funds, not the day you were approved, but the day you receive the funds. The banks actually have to disperse the PPP loan within 10 days of the authorization from the SBA. So within 10 days of getting the SBA authorization number, they have to disperse the funds. Once the employer or the business owner receives the funds, from that point on, they need to use the funds from the PPP to their payroll to get the most out of the forgiveness calculation. So we can get into what's included, but it really includes everything that you would normally associate with a payroll, your biweekly or weekly payroll amounts. It could be paid sick leave, vacation, you name it. The only things that are not really included in the calculation as far as the loan is concerned are the federal employment taxes and any required federal income taxes that had to be withheld withheld from an employee. And then the qualified sick and family leave wages under the new FFCRA, the Families First Coronavirus Response Act. So you process your payroll as you normally would. If you recently had to lay off someone, the incentive is to bring them back in. Hopefully all of you have work to do and you're not one of those that can't get back to full capacity anyway because the local government has closed your business. But unfortunately, that's the way the fund was structured by Congress. And after the 8-week period is over, the mid-June or at the end of June, you would submit your payroll information to the lender, and the lender would then, calculate, the total payroll amounts over the 8-week period, and then you can add in another 25% of your operating expenses. That could be your lease payment or utilities, whatever it may be, and combining those two things together, they would basically subtract it from the original amount. And if it ends up being exactly what you were granted, then the whole thing is forgiven. The only curveball with this is if you also applied for the economic injury disaster loan and you got the advance, whatever that advance amount was is essentially an advance on the PPP. So if you received a $3,000 EIDL advance, basically you've already received that forgiveness from the PPP because businesses can't enjoy, is the word, the benefits of the grant forgiveness aspect of both programs, because that would be unfair to a business that only applied for one of the two. So basically, if you received an EIDL advance of $3,000, and that would be deducted from the forgiveness calculation when the lender adds up everything. So essentially, people have asked me, well, what do I do? I say, well, you have $3,000 in hand right now. Just be aware that at the end of June, when you meet with your lender, you're going to need to either provide the lender the $3,000 or consider that that difference a 1% loan that would be managed like the PPP. So it's a 1% loan for a 2-year period. So either way, that's the explanation of the PPP forgiveness and how it interacts with the economic injury disaster loan. Forgiveness calculation for sole proprietors, I guess I won't read that, but it's essentially the 8 weeks of, or 850 seconds of their net profit from Schedule C, line 31, and then any qualified or any deductions that were noted in their Schedule C for utilities or mortgage and things like that can be added to it. So it can be 75% all the way up to 100% forgiven, depending on the situation. Yeah, there we go. Other qualified expenses up to 25% of the loan. One thing I need to mention, the PPP has, it's firmly stated in the law that 75% of the loan, as far as forgiveness goes, must be attributed to payroll, or in the case of a sole proprietor or a single operator LLC, it has to do with their compensation or net profit. And then the additional 25% that can be added in can be other things like, utilities, lease payments, things like that. Any questions? I guess I'll get to them after.
Thanks.
So this is the key, yeah, how to use the PPP funds. 75% of them must be used for compensation. It can be commissions, salaries, wages, tips. You can actually, do a good faith estimate on what the tips amount would be and include that. Vacation leave, sick leave, retirement deductions, contributions to retirement, anything that would be normally noted on in a payroll. One question I've been getting that I don't think would be included would be I was just going to say it, the prorating things that were incurred from earlier in the year or later in the year, such as deferred compensation and things like that. So really what you would process your payroll as you normally would, nothing magical about it. It's just trying to maintain your employees and bringing back those that you recently had to lay off. So sorry about that. So the program, the timeline begins right after you receive the disbursement, and I kind of went through that. The borrower, if they don't get back to the lender within 20 days of being approved by the SBA with loan documentation, whatever it may be, the loan would be canceled. So there is a timeline for the borrower to act as well. This is a key slide. Maintaining your FTE count or full-time equivalent employees, and maintain their wages. The difference can't be more than 25%. And then, rehiring people. It doesn't have to be the same person, but just bringing back an position. If you can do it, then you can maximize the amount of forgiveness. Using both the EIDL, I kind of went through this before. There's also a new employee retention tax credit that's being offered by the IRS. And I've read some articles that said, employers should really look at that when considering the benefits of a PPP versus, other means of receiving money. In this sense, it would be a tax credit that you would enjoy later, but it is fairly sizable. 50% of qualified wages up to $5,000 per employee, and it would be on either the second quarter or the third quarter of the year. Businesses that really aren't going to be hiring back or able to hire back until later may get some relief from this IRS employee retention tax credit. Good Lord, people are calling me right and left. Sorry about that. Let's see, access to capital options. Yeah, this is something I wanted to mention as well. Our 7A and 504 loan programs, I don't know how familiar you are with them, but these are our standard loan guarantee programs. The SBA basically guarantees 50% up to 80, sometimes 90% of a loan that a bank makes with a client. And it's meant to turn what could be a risky situation, either if the credit score isn't what the bank likes, or if the credit score is good, but their collateral isn't quite up to where they'd like it. The bank asks the SBA for a guarantee, and we guarantee the loan. And it's meant to turn a no into a yes, so that a small business can have the capital they need. These go up to $5 million. There's an express program that is up to $350,000. The 504 program is a specific loan that is only for either property or equipment, not operating expenses. And the benefit of that particular program is the term can go out to 25 years. And the cash injection from the business owner can be as low as 10%. If it's a startup, it can go as high as 20, and the average is 15. But it is a way for a business to get a sizable loan for property or equipment with a fairly low cash injection. And that's something that's processed by a lender and a CDC, Certified Development Company, and the SBA underwrites it. Right now, if you already have an SBA 7A or 504, the SBA has a debt relief program where we're actually paying the principal and interest of those loans for a 6-month period. And if you were to apply and receive one before September 27th, we will do the same thing for you as well. And I mention this as something that is an alternative. If you need capital, right now the banks are lending. There's not a credit crisis. I have no idea if that may happen as a result of this steep recession. But it's something that, even if you may not need the money, right now for capital improvement or operating expenses, you may want to at least, have a line of credit or something out there available, because when the door starts closing, and if there is a credit, not a crisis, but a credit crunch, then it's going to be very hard to obtain capital. And so this is just something to keep in mind, that the SBA has this debt relief program that's actually very, very nice, because you basically have 6 months of no payments, and we're paying for it. We're paying for the loan, servicing the loan. Let's see. Okay, there we go. This is a chart we use in our access to capital workshops. And basically, these SBA loans, you do go through a bank. The only time we loan directly to an individual business owner directly is that economic injury disaster loan or a physical disaster loan that occurs after a president signs a declaration for a disaster, and we can loan directly. So otherwise, things have to go through a bank. these loans go through lenders. So the lender needs to know, understand, believe in your plan. I think the trick for all of you right now is, okay, how am I going to change my plan for the next 6 months, 3 months, or a year to adjust, getting through this and hopefully finding opportunities in this crisis. And so it's really hard, and I don't empathize with you. It's probably the hardest time you're gonna had to deal with anything like this since the last big recession. So please reach out to your small business development centers. They have access to databases and systems that you would normally have to pay hundreds of dollars for to a consultant. So everything from IBIS World, which is an awesome marketing tool, business tool, Profit Sense, which you all are familiar with, that we used in Emerging Leaders, that can give you a nice, 9-10 page report on how your financials compare with the average of those in your industry sector. But that IBIS World database, I mean, they can give you a very, very good analysis of your competition, market potential, strategies of how to expand and grow your market share. So please reach out to them. Hopefully you have one nearby. If not, there's SCORE. SCORE.org is a great website with lots of templates and blogs. If you need a cash flow calculator, they have spreadsheets that are free that do the calculations for you. So score.org, it's a great website, and your SBDC. And I don't know, how am I on time?